you know, Bitcoin's doing really shitty. I heard it's like down like crazy.
Sell off, massive sell off. Yeah.
Why?
Why? Well, in my view, there's a few reasons why. Number one is, there's a lot of ETFs out there that are proxies for Bitcoin, right?
What does that mean?
An ETF, that means they're buying Bitcoin, like IBIT.
And putting it into the ETF.
Well, you're buying an exchange traded fund that tracks, the price of Bitcoin, and like IBIT actually buys the Bitcoin,
Okay.
right? So you were thinking the initial view on that was you have all these other different vehicles out there to bring in more liquidity into the Bitcoin market, more buying, so it keeps the price up or drives the price up. Now all these ETFs are negative outflows. More money is going out of the ETFs than coming in. That's why all the ETFs are getting slammed right now. So that whole idea of the ETF as being, and an alternative means for liquidity and demand into the Bitcoin market is gone upside down. It's being a negative effect right now, number one. Number two, you got this cascading liquidation effect, right? Cascading liquidation. That means cascading selling. That means like a snowball going down
Why?
a mountain, right? So, most of the Bitcoin on crypto markets are levered. What does that mean? People borrow money to go buy it, right? And as you know, right, if your LTV is too high, what happens? You can't hold it anymore.
Debt.
You can only have so much debt against it. So, and it's like you're getting margin calls up the wazoo on Bitcoin holders. So if the price of Bitcoin is here, they borrowed so much. As long as the price of Bitcoin stays at this level, they're okay. If it drops, they get what they call a margin call. They're forced to sell it, because it's too leveraged now, based on whatever the brokerage firm or the platform's maximum leverage, minimum equity or maximum leverage requirements on this asset class, meaning crypto.
Whatever the allowance is.
Whatever it is, right? So that triggers a forced sale. And what happens to the price? When you sell, it drops the price. So that drops the price more, and then other margin calls hit. And then drop the price more, and then you see, like a snowball, downwards. It's a cascading liquidation effect of selling. Selling begets more selling, driving the price down, right? And I think what the biggest concern is the elephant in the room is MicroStrategy. MicroStrategy used to be a software company. Today, it's just a leveraged Bitcoin holding company. All it does is raise capital, buy more Bitcoin. And what MicroStrategy used to do is it would raise capital, buy more Bitcoin, Bitcoin price goes up. Can go raise more capital, sell more stock, issue more convertible debt, and then buy more Bitcoin, driving the price up. That's gone the other way right now, because the market forces are so strong, it can't even prop up the price. MicroStrategy can't prop up the price of Bitcoin. The big risk with MicroStrategy is because it's a levered Bitcoin holding company, right? If Bitcoin keeps tanking and tanking and tanking, it might get to a point all its convertible note holders. So how it raises money is it says, hey, give me money, I'll give you a convertible note. I'm not going to service the debt. I'm not going to pay you interest. One day I'm going to convert the money you lent me into equity in my company, into stock in my company. That made a lot of sense for people when you thought Bitcoin prices were going to go that way. Bitcoin prices go down this way, they might be forced to convert all their debt holders into equity. And what is those people going to want? They're going to want their money back, right? And then you're going to then MicroStrategy is going to have to be forced to sell its huge Bitcoin coffer, which is going to do what? Drive the prices down even more. That's the elephant in the room, to me. You got to watch out for. And today they're talking about, they have earnings, MicroStrategy. So we'll see. I don't know how it's going to pan out, but it doesn't look good.
Let's see.